Hi, thanks for joining me on my market report. My name is Mike, and my market report is on mortgage rates. We discuss on a daily basis what impacts mortgage rates, whether it might come from the economic calendar or it could come from headline news or geopolitical. Sometimes it even gets confusing when good news is now bad news and vice versa because the sentiment changes and investors react differently. And we just try to get that information out to you. So if you're following along with rates, you got a little bit of information as to what's going on here. A little bit about myself is I am a loan officer. I work with a national lender. We lend in all 50 states, so we'd love to be able to help you with your refinance or purchase needs. So please reach out. But more than that, we like to be a resource for you folks. If you guys got any questions about anything, we're here to be here as a resource for you guys if we can get that information for you guys. Uh, so without any further ado, we'll just jump right into it. We'll start out with the economic calendar. This week's been really light, but today we got probably the first actual one we usually get, which is on every Thursday, which is the jobless claims. Uh, Last week was revised slightly higher from 200,000 to 202,000. Forecast for this week was supposed to be a little bit higher at 210,000, and it came in at 229,000, which is actually a 5-month high for that we've been getting reports. So that's something we'll have to keep an eye on if it's going to be something that we'll start seeing an uptick on, or if it's something that just kind of an aberration. However, if you look at the continued claims, it still remains unchanged because uh, last week's was revised slightly lower from 1.309 down to 1.306, and that's where we came in at 1.306 this week's. Now, we did have earlier on, ECB gave their statement, like we had the Fed the other week, uh, or actually the Fed will be meeting up, coming up pretty soon, excuse me. But the Fed, they did have their meeting today, and they did announce that they will be doing a rate hike starting in July. They'll also be doing their uh, ending their asset purchases, and but the difference between their asset purchases, they're not looking to sell them off, but they are going to reinvest when they mature. So they'll be going that route as well. So they'll look to have a July and September rate hike, and then, but they did one of the things that probably is one of the things that really spooked the markets is the higher inflation outlook for them. So they did figure that there will be a higher inflation outlook forecast, and I think that kind of spooked the markets a little bit. Stocks are down on this. This news, this hawkish news, kind of hit the European markets and then kind of rolled over to the U.S. and has hit the U.S. markets as well. We've been kind of intertwined lately. We've been kind of following what the European markets have been doing. So as soon as the European markets are doing positive or negative territory, we're kind of almost following suit. Same thing with our treasuries. And speaking of such, we're still above the 3% range. We're up now slightly to 3.04. So we're up a little bit higher than we were yesterday, which has more pressure. Today's been kind of one of those days for mortgage-backed securities where we're uh, pretty big seesaw. So right after the ECB, we see this pretty big drop here that had a pretty big impact. Then we kind of rebound a little bit when we've been doing this up and down dance, up and down, up and down. And the 30-year Treasury kind of helped us out. This was right around the 10-year Treasury auction, or I'm sorry, the 30-year auction, which came in as a surprise. It kind of helped things up. So we kind of raised it back to where we were. And then this over the last half hour or so, we've been kind of dipping a little bit further again. So it's been one of those kind of days here. And as a result, I mean, pricing is worse than yesterday, even with in some cases, with those improvements in the day. We did see some price, as you see down here. We had some repricing for a little bit better, but that pricing is not going to be as good as what we had yesterday, even though yesterday was down as well. So just to kind of put things in perspective, where things are at. So again, mortgage rates a little bit worse today than what we saw yesterday. And lastly, we'll touch on what's the average rate for a conforming loan limit here in the U.S. These do have points built into them, plus they are priced basically after yesterday. So a 30-year fix is now up to 5.57, and a 15-year is at 4.88 now. So they are kind of a day delay because they're using the data or the markets, what were based on yesterday, these numbers here. So, anyways, if you guys want a rate quote, or if we can answer anything or help you guys out with anything, please reach out. We're here to help you guys out. Meanwhile, we appreciate you guys, and we ask if you guys, like these videos, so please smash that like button and share. We greatly appreciate folks. You guys have a great rest of your day. Thanks so much for watching, and we'll catch you guys in tomorrow. And remember, tomorrow's a big day for the week because we get the CPI report, and this is what investors have really been kind of watching pretty much this whole week, waiting for. All right, have a great rest of the day. Thanks for watching. Bye-bye.